Hello traders, Gary Wagner here, just after 12 noon in Honolulu, 6 o'clock in New York on Tuesday, 2nd day of July 2024, and this is the evening report for gold and silver.
So September?
I'm not going to be landing on any specific dates here today. Let me also say that we're well aware that if we go too soon, that we could undo the good work we've done of bringing down inflation, and if we go too late, we could unnecessarily undermine the recession, the recovery, and the expansion.
Gold prices did oscillate significantly throughout the day as Chairman Powell spoke at a banking forum. We can see that during the day, we opened right around $2,339, traded to a low of about $23.29, and then peaked to a high of $23.46 before closing lower on the day, settling at $23.39. Fractional dollar weakness did provide some tailwinds, tempering the moderate decline in gold today, with the index closing down 0.12% at 105.713. Silver continued its slow but methodical climb to higher pricing, beginning a few days ago at $29.05 and closing today at $29.86.5. Today's gain was a gain of 0.70% or 20.5 cents. As you know, last week and to some extent yesterday, we talked about the fact that gold rose significantly from about $1,900 to highs up at around $2,200 before entering a correction that was characterized as a consolidating market, a triangle pattern that can be labeled as a flat bottom and a descending top. We looked for that particular pattern to form what's called a thrust, and that, of course, occurs when prices break above this upper level resistance line. In the case of this example, we had a near parabolic move until we had a slight correction that was best described as a bull flag, and that took gold to the first of two all-time record highs. Why is that significant now? It is because we are recognizing a very similar pattern to what occurred between December and March at the beginning of this year and the end of last year. And it is very close to being a repeat of what we saw back in December and February, and that is the fact that we have had significant support at approximately $2,300 per ounce, and that has occurred on multiple occasions beginning in May and then occurring at the beginning and end of June. Add to that, we have had a series of lower highs creating a descending top. Together, they form a chart pattern called a descending top and a flat bottom. Typically, we can see it break to the downside or upside, but that depends on the primary trend direction going in before the pattern is created. So after a rally such as this example here, we typically look for an oscillation between the descending top and flat bottom and a break to the upside. If it was occurring after a price decline or a correction, we would again look at this as a corrective pattern and typically see a break to lower pricing. In the case of what we're witnessing during this identification of a corrective triangle, we believe that it could break to the upside. Lastly, our outlook for silver puts us with a cautious but optimistic viewpoint. We can see that silver bottomed on Wednesday, the 26th of June. We have seen a consistent move with higher lows and higher highs over the last 5 trading days. I believe that if silver continues to track higher, resistance comes in between $30.65 and just above $31, with one caveat, and that caveat is if we look at this through the eyes of a Henkinashi chart, we can see that just now The candle size is beginning to grow a little bit, but nowhere near the size of a strong rally in silver. We need to see a greater daily price gain than we have seen currently before our cautious optimism becomes optimism. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.